Welcome to Market Outlook. First of all, let's start with a brief review. Last day, domestic indices ended flat as investors avoided taking large position due to fears that US policymakers might not reach a consensus on the budget deal to prevent a fiscal cliff. Turnover in the cash market stood at 93 billion rupees versus 142.8 billion rupees which had on Friday. Indices were volatile due to rollover of position to the January derivative series from the December series. Provisionally, Nifty rollovers stand at 42% and the market-wide rollovers at 39%, with the most rollovers being on the long side. Top 5 NSE gainers were Tata Motors, which gained 2.52%, followed by DLF, Wipro, Axis Bank, and Sun Pharma. Top 5 NSE losers were Jindal Steel, which lost almost 2% after the ONGC, Maruti Suzuki, Ultratech Cement, and the Grasim Industries. Among the sector indices, 8 out of 13 sectors managed to close in the positive zone. Realty, tech, and healthcare are among the best performers, whereas metal and oil and gas FMCG counters entered lower. Maruti Suzuki was among the biggest losers on the Nifty as the company on a Saturday revised the downwards sales growth guidance for the year ending March to 6% from 10%. The stock ended 1.6% down. FTC shares surged to 10% on news that the promoters were looking to sell 67% stake in the company. The shares were firm despite the company sending a clarification to the brokerage that it is not looking to sell any stake. Coming to today's outlook, in the absence of any cues from the overseas market, trade on the domestic market is likely to remain choppy based on rollover activity in the derivatives segment, a day ahead of the December future derivative expiry. The US stock market was also closed on Tuesday for Christmas holiday. On Monday, US indices ended down 0.3%. Key Asian shares were trading slightly up, with the shares of Japanese exporters getting a boost from weakening yen. The premium between December and January futures suggests that most of the positions were rolled over to the in the long side because there was a premium of 50 points between January and the December contracts. Technically, the market was trading in a narrow range with the support seen at a 5840 range. And 5820 is the 20 DMA for the Nifty. So breaching below that can drag the Nifty to 5750 range. But on the long side, on the upper side, we have a resistance of 5880 and 5918 in the coming days. Because of the rollover activity, trading is likely to remain very volatile. So we advise our investors to take a cautious stance up to the expiry. So that's all from my side. Thank you. Have a nice trading day to all of you.